Hello everyone, I hope you guys are having a wonderful day. I'm Arif, your financial freedom journey partner. In today's video, I'm going to talk about the strategy that I follow to invest my first $10,000 if I have to start over. So I know it's scary, like investing your hard-earned money in stock market. It is scary. I have been through the path because at the very beginning we have the doubts like whether it's a good decision and how to do it. But let me tell you one thing: if you don't invest your money and put your money under your savings account, then guess what, your money will lose the value, because with the high inflation rate, your purchasing power is getting lower and lower. So the only way you can fight against the inflation and get some good decent return is investing your money. And I am a kind of a person who would like to do it by myself. Like, I want to really know what's going on with my hard-earned money. I don't want to just use some firm or some other financial management the company to manage my money. If you are really interested to invest your money in a stock market, like you want to invest your first $10,000, then you should definitely watch till the end of today's video, because at the end you will have the complete idea like how to invest your money, how to diversify your money, and also the major red flags that you need to be aware of. So without further delay, let's start the video. So at the very beginning of today's video, I just want to show you my current portfolio update. So I am in Canada, and in Canada, Wealthiful is pretty popular. So I use it because it's pretty easy and user friendly. So if you want to start your investment journey, I would highly suggest you to use Wealthsimple, because it's very easy to understand like what's going on inside your account. So if you look into my portfolio, at the very top, you can see the figure $167,317. So this is my current portfolio value. And also there is another number that is like $63,610. So this is the return that this is the money that I made from the stock market, which is like 61.34% return. So I'm pretty sure like if you just put your money in your bank account, they won't give you this sort of return, and you can't even beat the inflation, current inflation rate. So there is no other way than educating yourself about stock market investment. Once you know the game, trust me, things will be much easier. You just need to follow the rule set, and you can see like how fast your money gonna grow for you. So that's the total value, and I do have a TFSA account. Under TFSA account, I do have $75,000, and so far it has returned like 74%, which is impressive. Then I have non-registered personal account, and on the personal account I do have $71,000, and I got like nice 37% return. And I also invested some under some cryptocurrencies, and current value of my crypto portfolio is 20,000, and it's up by 149%. So that's a quick update of my current stock portfolio. I am pretty sure after seeing the returns that my portfolio generated, you are very much pumped up to invest your first $10,000. So before I talk about the strategies of investing $10,000, there are a few things we need to first be sure of. The first thing is that we need to have an emergency fund for the next 6 months. So before you even think of investing your money, first you need to have the emergency fund. For some reason, like for instance, I'm doing a job right now. What happens if the next month I face a layoff? So when there's a layoff, then I need to survive, and for the survival phase I need to have some money put aside so that I can take care of myself. So it is always suggested to put at least like 6 months of expense at a side, so that whenever there is a rainy day, you know exactly like how to take care of yourself. So first make your emergency fund. Once you have the emergency fund, now you will be more confident to invest your money. Then you don't feel the necessity like, yeah, this is the only investment that I have, and if something goes wrong with the money, then I am in trouble. So that's the key point. Like here you feel like more confident about your investment. And once you have your emergency fund, now the next step is to find the account type where you want to invest. So I'm in Canada. In Canada, we do have the TFSA. TFSA stands for tax-free savings account. So I really like TFSA. The reason behind is that the money that you're gonna make, the gains, the returns that you're gonna generate from your investment is totally tax-free. So you don't have to pay any taxes if you're investing on the TFSA. But here is the catch. There is a very limited room for the investment. So every year you get like $6,500 or $7,000 of investment room, new investment rooms. So the next question could be like, once I invest all my money under TFSA, I max out my TFSA, what should I do? So then you can look for some other options like RRSP or the non-registered or personal account. For me, I choose a personal account over RRSP because RRSP, there are a few rules like if you want to withdraw the money, then you have to follow some certain rules and once you reach a certain age, then you can withdraw your money completely without any penalty. So I feel like I like my freedom, so that's why I chose the personal account. Under personal account, the clause is like whatever money that you're gonna make, like the returns, you have to pay taxes. But here's also some benefits. If you are a long-term investor, then your tax would be much lower than the regular tax bracket because you are holding a stock for a long time. All right, so now let's talk about the interesting part, like how would I invest my $10,000, which strategy I need to follow, how I would diversify my portfolio. So for a solid foundation, the first thing that I would do, I would put like almost 50% of my investment. 50% of $10,000 comes to like $5,000. I would definitely invest it under a good ETF, and the ETF that I'm gonna choose is VFV. VFV stands for Vanguard S&P 500 Index ETF. So a good question could be like, what is S&P 500? So S&P 500 is like a basket of stocks, like the top performing 500 stocks of US stock market. So whenever you're investing, like you're investing $100 under a VFV, this $100 would be distributed among the top performing 500 companies. So the benefit of investing under VFV is that here you are facing less risk because your money is invested into this top performing 500 companies. So even if one company is not doing well, then still the risk is way lesser. And in a long term, like if we want to see the return in 5 years, this VFV has grown by 94.35, like almost 100%. So if you invested like $10,000 under VFV, but after 5 years you would have like $20,000 because US economy has always proven like it's very strong economy and it has grown over a period of time. So currently I am holding near around $30,000 of VFV shares, like VFV shares, like almost like 200 shares of VFV, and so far it has generated like 33.0% return, which is like $7,530 of my investment. So the return. So from $10,000, first $5,000, I'd definitely invest under VFV. So once it is taken care of, now I would try to look for some dividends, because here under VFV is more of a like growth thing. So right now the dividend or yield is very less, like almost like less than 1%. So I would like to have some nice dividend coming to my account. So for that I would choose the ticker named VDY. VDY stands for Vanguard FTSE Canadian High Dividend Yield. So whenever we're talking about Canadian stocks, most of the Canadian stocks are blue chip stocks, are dividend stocks. So if I really want to have some nice returns and also want to diversify my portfolio and want to have some Canadian stocks, then VDY is an excellent option. So in last 5 years, it has grown by 36%. So it's also grown quite well, and the dividend that we're gonna get is 4.34%. So that's a very nice dividend that gonna hit in our bank in our portfolio, and like in every month. That is pretty great. Currently, I am holding your around $18,000 of VDY, which is like 361 shares, and it generated a nice return for me too. Here, cool thing is like every month, if you notice in here, like I am getting good dividends under here. Like in December, I got $32 under my non-register account, and under my TFS account, I got like $23, like almost like $50 to $60 I'm getting every month, which I am reinvesting so that I will have the effect of compounding snowball. So now the question could be like how much we need to invest under VDY from our $10,000. So $5,000 already invested under VFV, the S&P 500, and here I would definitely invest like my 20%, which is like $2,000 more. So $2,000 I would invest under VDY to get a nice yield or dividend every month. So now out of 100, 70% is already invested, and we are left with 30%. So for 30%, now I would consider some single stocks, because right now we do have very solid foundation. Even if we have some bad news, something goes wrong in the stock market, still will our portfolio won't go down that much, because we have this nice diversification going on for us. The next thing that I would do, like I would buy some blue chip stocks, like the stocks that are doing well and it's proven record. It has the proven record. So a good question could be like how I can find those kind of stock that would do well in the long term. So for me, I work in tech industry, and in tech industry there are very well-known stocks like Amazon, Google, Microsoft, Nvidia. So I am pretty confident that in the next 10 years this share gonna go up and up, because I know the underlying technology and the growth potentiality of this particular stock. So let me show you my watch list in here. From here you can know exactly which shares I'm tracking right now. So I am holding currently Apple, then Amazon, then Google, Meta, Microsoft, Nvidia, Shopify. These are some big names. So I just want to show you like how much I've invested in this stock. So if I open Amazon, which I like a lot, the Amazon share is doing great. In the last 5 years, it has grown by 120%. And currently I am holding near around 8,000 US dollars of Amazon shares, like 36 shares, and it has generated 88.25 return, almost doubled my money from the Amazon investment. So a good question could be like what percentage we need to invest under this stocks, single stocks that we are confident about. So remember, I am more confident about the tech sectors. That's why I'm investing these tech shares. So if you are working in different industry, like in finance or any other industry, and you know some particular companies, you know their fundamentals, like the potentiality to go up, then you can buy those particular shares. For every single person, like my expertise is in tech, that's why I'm more confident to buy that exit stock. Maybe for you it's a different sector, and then you need to do some research and need to find out which shares you feel like gonna go up, and you can purchase those stocks. So from my point of view, like you can invest near around 20% of your investments under this shares, like single shares that you are confident about. So then 50% is VFV, 20% is VDY, and the next 20% is this growth and blue chip stocks that you believe in. So 90%, this is how I would invest 90%. And now a good question could be like, what about the rest 10%, where should we invest the rest 10%? Well, it should be 50-50 situation. So here I would invest 5%, like next $500 into some small cap, but there's a huge potentiality to go up. So this will help me to get a very nice growth. So if you are pretty sure like this company is still its early phase, but it has the potential to go up. So here the situation is high risk and high reward kind of scenario. So if you find some of this stock, then purchase. Maybe you have shortlisted 5 of these stocks, okay? And out of 5 stocks, you have purchased few shares of these 5 particular companies, and out of 5, only 2 made very good, nice returns, but other 3 is not generating that much of return. But let me tell you the cool part. Even if the 2 stock is doing good and 3 is not doing that good, 3 are not doing that good, the returns that you're gonna get from these 2 stocks will be way higher than the loss you're gonna face with the rest 3 stocks. So that's a kind of like a strategy that I need to follow. And the rest 5% I would invest in crypto currencies. The reason is that if you see my crypto market, market value right now, is up by 150%. So it has generated more returns comparing to my TFSA and personal account holdings, because the risk and reward is pretty high. So at the very beginning of our investment, we need to have the very nice push, and this crypto investment gonna help me to have a nice push, nice return. And even if you consider the crypto market, like even it's a very early stage, it has a way strong potentiality to go up in the near future, because the blockchain is the next big thing. Like the world economy gonna change with this crypto. So that's why I would invest the rest 5% under this crypto market. And whenever I'm talking about crypto, I'm talking about the big players like Bitcoin, Ethereum, the Litecoin, something like that. I would create some other videos where I'll talk more details about the crypto investments. Congratulations guys for reaching this far after this video. I have discussed about like how I would invest my first $10,000 if I have to start over from scratch. So now let's talk about a little bit about the mistakes that you must need to avoid to grow your money. The first mistake is don't buy any stock that you didn't do your own research. If you find from some of your friends like they are suggesting like, hey, this is the next big thing, buy some stock of this, guess what, before you buy those stocks, you have to do your due diligence. You need to check the fundamentals, you need to check the growth potentiality, the balance sheet of the company. Once you are pretty sure and confident about it, then you can make your move, because it's your hard-earned money, right? Even if, for an example, like you want to buy a phone or something, you do a lot of research, you try to go through the specs over and over again to make sure you are doing a right purchase. So why not do the same thing with the stocks? Whenever you're buying some stocks, you have to do the checkup, because here you're also buying the stock, so that means you're gonna hold it for a long term to make some good returns. So why don't you do your own checkup, and once you are pretty confident, then buy this stock, then you'll have more confident about it. The second thing that you must need to avoid when you are investing your first $10,000 is not following the proper diversification rule. So with the $10,000, if you just buy some single stocks for $10,000, that means what? Your whole money, your investment is depending on a particular company. If the company is not doing well, that means what? Your whole portfolio gonna get the impact. So don't do it. Please invest under the ETF like VFV, VDY, so that even if the market is going through a rough period, your portfolio would do just fine. So that's some advice from my side. If you guys have any questions or any doubt related to your investment journey, let me know in this comment section, and I'm going to reply in a very short bit of time. Remember, investment is a long term thing. It's more of like marathon than a sprint. So you have to put your time and effort. You have to educate yourself, and guess what? Once you find your strategy, from that point it will come all naturally, and your money gonna grow in a very fast pace. Thank you so much, guys, for watching my videos. It means a lot to me. If you guys have any question or any doubt, please let me know under this comment section. If you found this video helpful, please like and subscribe to my channel so that you can see my upcoming videos. Well, that's all for today. Have a great and wonderful day.